So, folks, you've been on my channel for any length of time. You know, we talk a lot about housing, a lot about lending. We talk about the U.S. having a unique option in 30-year fixed rate mortgages. We've heard a lot about New Zealand, the UK, and Canada, where the 30-year mortgage is not common. We have an investor who plays in Canada. Natalie, how you doing?
I'm good. How are you, Michael?
I'm doing very, very well. So you came to us just on episode number 1 talking about the new build couple and a great ebook that you just produced documenting how to do your story. The people can find that on your Instagram page? Is that right?
Yes, exactly. At thenewbuildcouple.com, there's a link on a Shopify store and they can get on that and check it out.
And they have a discount code
Yes,
Zuber15.
I keep
Zuber15. Go
forgetting.
save some money. That's okay. That's okay. So folks, go check them out. Say you saw her on One Rental at a Time. That would be great. But I have some questions about lending in Canada. These are just things I've heard, but you are in Canada. What part of Canada are you in?
We're in Ottawa, Ontario, so that's the national capital region.
Very, very cool. So I have heard that a 30-year fixed rate mortgage for owner occupant is not very common in Canada. Is that true?
That is true. I have never been offered a 30-year. It's always been 25.
So 25-year term. So that's one
Yes.
difference.
Yes.
Now, I hear, again, these are just things you hear in the United States, and we are full of fake news. So all of this could be wrong. I hear 25-year fixed rate terms are not very common in Canada. Lots of people got 3 and 5 year terms. And unfortunately, given the raising interest rate, they're having to refi in a different rate environment. Is that true? Or is 25-year fixed pretty common?
So honestly, I don't know what is we work with a typical sorry, with a credit union. We haven't ventured out a lot into the bigger banks.
Okay.
So I don't know what the common thing is. I know that our common thing is a 5-year fix on a 25-year amortization. That's always what we've done. We are offered 3-year fix once in a while, depending on what the rate discount can be. On the last one, we took a 3-year fix because it was better. Well, it was better. It was still a 6% interest rate, which sucks, but it was better than at 7% if we would took the 5-year. So yeah, but typically we do 5-year fix on a 25 term.
Yeah, and again, that's what again my I'll call it research, just call it reading, really highlights is a lot of New Zealand, the UK, and Canada and other areas have 3 and 5 year fixed, whether it's 25 or 30 am. That really doesn't matter. It's the
Mm-hmm.
term that's getting people,
Yeah.
right? If and the other thing I heard that I thought was funny, this was I was with a couple from New Zealand a month ago, and they were telling me that their mortgages, like in 2020, had a 1 on it. I don't know if Canada ever had mortgage like 1.2, 1.3. Like
Yeah.
back in the day, were you getting mortgage rates that low?
Yeah. Well, in the beginning of COVID, yeah.
Yeah, that's like what was the mortgage rate at the beginning of COVID in Canada? Like,
Around that, around, I think I've never gotten it because unfortunately we were all on 5-year fix, right? So we have it, we're due to renew this year, unfortunately, for a
bad
couple of
timing,
them.
bad
Yeah,
time.
horrible timing. But I know of some people that, yeah, they locked in like 1.3, 1.5, 1.6. But that was mostly with variable rates though.
Oh, of
I
course.
haven't
Oh
seen
yeah,
it
of
for
course.
fixed. Yeah, so
Yeah.
now, right now, they're not paying that.
Yeah, no. And again, what you're talking about variable rate loans, those could reset monthly or yearly, or do you know?
I don't know. Like I've always taken
More
it
frequently
fixed.
though. Yeah, more. This
Yeah,
is
definitely more frequently.
yeah. This is these are the things that I'm hearing. And again, for 40 years, from 1981, 82 to 2022, rates in the world were falling.
Yeah.
So taking an arm or floating worked out.
Yep.
Not so much right now.
Nope. Nope.
No,
And
absolutely.
yeah, and I was gonna say too, the oh, what was I gonna say? I was gonna say something and it just escaped me. Keep going, maybe it'll come back.
There you go. Yeah. So again, people were getting mortgage rates with a 1 on it today. Obviously, Canada's been very aggressive. I think Canada was the first country to raise rates 75 bips months ago.
Yes, we
Um,
were. That's
rate.
actually what I was gonna go at.
Oh, there you go. Go ahead.
Yeah. So yeah, we were the first one, and actually I think we're the first ones to stop the hike
Stop.
too. Yeah, they just announced it on March 8th, I believe, that they were going to stop the hike. They stopped it at 4.5%. And so they're seeing that, like, we're heading in the right direction, which is really good news. They hope to even bring it down at the end of this year or beginning of next year. Obviously, that's just talk. That's the forecast. We don't know what's actually going to happen. Yeah, but I really hope it does, because we're due to renew 3 mortgages at the end of this year.
Yeah,
um,
exactly. Yeah.
yeah, but I know that also, like, what's different from Canada and from the US is that the banks are federal. They're federally,
Two big banks, right? Bank of Canada
yeah.
and Bank
So
of
yeah, so they're how do I say that? They're I have the French term in my head, so obviously that's not helpful.
what's the
But yeah,
French term? I'd love to hear the French term.
sont régularisés.
No idea what that is.
Yeah, exactly. Silly French me. So yeah, the banks are basically ruled by the federal, right? Whereas
Yep.
in the US, they are privately owned. They have their own laws surrounding how they're governed, is what I was looking for. So yeah, they can do their own thing more than in Canada. Canada is a
Okay.
lot more strict, and they have to follow federal guidelines. So I think because of that, it's kind of helped our economy during the 2008 downturn as well.
Yeah. One of the things again that I'm hearing about Canada again, because a lot of people had these floating rates with a one on it that today aren't with a one on it. A
Yeah.
lot of them are cost burden. I think there's a lot of banks that are doing extend and pretend, or they're changing loan payments so people can stay in their homes because I read an article highlighting some folks in Canada that said they were estimated that 20 or 25% of folks could not afford their home today if they had to be approved at today's interest rates. So there's
Yeah.
there's there's some pain there, I think.
Definitely, I'm there's not a lot of people who talk about it, but I can see that there's pain. A lot of houses are going for sale. But the thing is too, is the sellers need to realize that if they're putting their houses on the market right now, they need to lower that price. It's not going to sell to the same price it sold a couple of years ago. And it's still, the sellers aren't grasping it the same way as
The
buyers are,
buyers and
because
sellers are not agreeing.
that's the thing, and the buyers know what's on the other end of trying to get qualified for that, and so they are gaining that power back finally. But yeah, no, it's there, you can tell that there's pain. There's, some people who have to sell, and they don't want to let go, but they have to, and so they know that it's probably temporary what's happening right now. So but it's they still, yeah, no, it sucks, but at the same time, we knew this was going to happen, right? I feel like to me, this I knew this was going to happen. You can't have those all-time low rates forever. It
Yeah.
just
Free,
doesn't
free,
work.
free money is never free. There's a price to be paid.
Obviously, and I mean, with everything going on in this world, you can't expect everything to just go up, 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 and not have a come down that's
Yeah.
going to be harsh, right?
Yeah. I think Goldman Sachs, in an article I read the other day, had Canada real estate down roughly 15% from the peak. Does that feel kind of right to
Yeah.
you?
Yeah, that's exactly what I've heard, what I've read, and what I'm seeing. Yeah.
Yeah. And again, I unfortunately, again, your central bank has stopped raising rates, first major country to do that at 4.5. But again, I've been in this game a while, and there's a huge lag effect. There could
Yeah.
be more pain ahead. I don't
Yeah.
think 15% is the bottom, I guess is what I'm
No.
saying.
No, 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 no. I'm expecting it to keep going. I was expecting 30%. I was expecting a crash. And I think, like you said, there is a lag effect, and we're probably going to see it at the end of the year. And that's when they'll start, hopefully, bringing the rates back down. But they might decide to keep it off for another year, because
Mhm.
there's a lot of correction that needs to be done. A
Yeah,
lot of,
there's
lot of, yeah.
there's pain to be had, right? There's a big hangover,
Yep.
and the answer is not more alcohol. Sometimes you just
No, unfortunately not.
yeah, yeah, yeah. So there's a lot of fun. I think yeah, there's I can't believe mortgages with a one on it. I thought the United States was crazy at 2.5, but 1.2, 1.3, but those today are in the fours, right? For folks, probably.
Oh, I've heard a lot higher.
Oh. Can you imagine getting approved for a loan with say 2% and all of a sudden it's 6%?
Yep,
That's
that's what's happening. It's crazy. So like you can't, if you can't afford that anymore, right?
yeah.
Even, and the rent rates went up like crazy too during this, but I mean, I think they're going to go back down just because everything needs to stabilize altogether.
Mhm.
Like we're seeing homes going for rent for $2,500, $2,200, and it's just that's just too much. If you can't afford that, yes, some people are going to lose their homes unfortunately and have to go to the rental market, but that's not what's going to keep the rental market sustainable at those rates. I believe they're going to have to come down as well. So which is where, people are gonna have negative cash flows for a while until things settle down again. And but it just has to happen. You can't
Yeah.
go, like I was saying, you can't keep climbing the hill at that speed and not come down.
Yeah, it was pretty crazy. The other thing I heard going on in Canada, Trudeau, is that his name? Justin
Yeah.
Trudeau?
Yes.
I think it was like 6 or 9 months ago, maybe a year ago. He outlined basically foreign buyers from buying homes, I think, buying real estate.
Yes, because we were having a lot of issues with that, a lot of like ghost buyers. So
Right.
people from China or
China. Yeah.
yeah, they were buying homes and we were having like I had friends it was mostly in the western region of Ottawa, where there was like 4 or 5 homes on their street that nobody was living in it. It was
Mhm.
really just people buying homes to settle their cash somewhere and nothing was
Exactly.
happening. There was no renters or anything like that. So
No,
the,
vacant. Yeah.
yeah, exactly. So we would call them ghost homes, and so they started putting Ottawa, especially started putting a tax for a vacant home tax or something like that. So if your home has been
Okay.
vacant for X amount of time during the past year, you're paying a significant tax on it. Yeah.
Nice. And again, it's going to be very interesting because one of the things, so I totally get it. I think that's a very creative thing to do. But I think as the market turns over, down 15%, maybe going down 30%, it might be nice to have those buyers come back and put some support on the market, I would think.
Yeah, I mean, just for us as investors, we're kind of looking forward to that. Not that we want the pain, but we want those deals to come back. It's been
Right.
impossible to get good deals in this past couple of years, so it'd be nice to start shopping again. And
Yeah.
maybe it'll make sense to do the traditional burst strategy for a couple of years and hold off on the buy and build like I do, right? We'll
Yeah.
see what happens, but I'm a little intrigued or like I
Yeah.
can't wait to see what's going to happen in a
So let
way.
me so let me ask it this way. If a existing home came on the market that made sense, it needed work, whatever remodeling, you would actually look at that. The reason you became the new build couple is because those weren't available. Prices were nuts. It was cheaper to build ground up and get a return than buy existing.
Absolutely. Yep, absolutely. But we have done a traditional burr in the past where it was a rundown property. We put about 40K in it, and it was honestly it was like good luck there. It was a good timing. We divided the property and sold it during the high peaks of COVID, but we're probably never going to see that kind of return again. But
Mm.
still, it was a fun project. It was like I wouldn't let our limitations of our strategy stop us from doing a good deal and making some money in another type of strategy, right? So no, definitely I would jump back into that if it was fun. It's fun to
Yeah.
just see a dilapidated property and do a before and after, right? Make it
Yeah,
look
I've,
better
I've
again.
I've done about 60 of those. There's nothing
Yeah,
better for me than taking an
exactly.
old, I call them slumlord properties and turning it into,
Yeah,
pride of ownership. That's what I love to do. Do me a favor, show the book cover one more time, because if
sure.
you go to Instagram, new build couple, use the discount code Zuber50, you can 15 Zuber15, you can get access to this story. 70 pages, all about building ground up, the strategies, protection, a lot of amazing stuff. Natalie, thank you so much for doing this. Thank you for coming back.
Yes, thank you for having me again. I really appreciate it.
Yeah. Any closing thoughts you want to tell people? It's possible to do ground up. You want to leave them with a little nugget?
Well, yeah, sure. I mean, honestly, there's no magic pill, there's no magic formula. You just gotta grind it out. You gotta do the hard
Got to do
work.
the work.
Yeah, I'm sorry. There you go. I didn't even notice. There you go. No, it's like, yeah, you have to work, you have to make sacrifices, and that's how you build wealth. That's how there's a lot of noise out there, right? On the TikTok influencers and stuff like that they're trying to showcase that you can scale really quickly and quit your job next year. Okay, maybe, but usually
No,
no. It takes hard
no,
work and dedication. You got to grind it out, and if you don't want to do it, then
that's
I'll
on
do it
you.
for you. I'll take
There
your
you go.
deals.
There you go. There you go. Well, folks, do yourself a favor. Get that treat. I've never done ground up development. You got to go get the book, see the story. Natalie, congratulations on writing your first book. quite the accomplishment. Tell Rob he has to write the next one.
Okay, we'll do.
All
Thanks,
right. Thanks again.
Michael.
You got it.